Hi guys, and welcome back to Crypto Chester. My name is Chester, and today I'm here to give you a BTC update, starting off with Bitcoin here on the short-term time frame, then smashing through to the mid-term, and then also the long-term as well. If you could smash a thumbs up on the video, it does help me out tremendously. And also, guys, make sure you watch it all the way to the end, because at the end, I'm going to be covering the weekly chart and looking at the real support levels that we can be looking out for if we are going to see Bitcoin crash even further to the downside into this dirty, filthy potential bear market. Let's get deep down and dirty into the charts. Let's go. Starting off with Bitcoin coming through on the short-term time frame, as you can see here on the hourly. We're still in this range, guys. We're still in this range. Yes, we did have a pretty big dump coming through yesterday, right? Pretty big dump coming through, bringing us all the way down to 28k area, bang on the dot there. But from there, we did see a bullish divergence actually come into force there and bang us right the way back up, right? Which is it's quite nice, but unfortunately, it does mean we're still in this filthy range. The support levels that are still valid here are these levels here in terms of support. As you can see, the candle body close, we still didn't get that below the zone, so there was not a short activation here on the short-term time frame. There was on the mid-term. Hold tight. I'll get to that. Made a little cheeky 3% there or something along those lines. But yeah, as you can see, this is the level of support that we are looking for here. And also, we're coming down to that right now, guys. So this is definitely an area to be looking out for a potential bounce. Or some hair flying around my face. Around 28,731 there. Definitely area to be looking out for a bounce there. But if we don't bounce and we actually see a confirmed break to the downside here, there is going to be a lovely short position, guys. There is going to be a lovely short position. We had this measure move from the last video, but that's now going to be invalid because we have got, oh no, technically it's not valid. We have still got that that most recent downtrend coming through from there. I was going to do something along the lines of this, but no, it's still valid pretty much like this, guys. So yeah, we can still be using that and still be using that 5.86% as those real take profit margins there. In terms of take profits here, guys, we know the drill. We know the drill. We want to be staggering as many of those as possible, around usually 4, and we take 25% of our equity out each time we hit a take profit. Once we hit our first take profit, we take our stop loss, move our stop loss to our entry point, right? And that basically eliminates a hell of a lot of trades being losing trades, right? So you can see, as I said there, I put in 3 take profits already. Might want to go a bit earlier, depending on what sort of candle body close that we're looking for. Maybe one of these wicks coming down here, or maybe even just hovering on the candle body closes along this sort of area. So around 28,300. But I do want to, when I get into a position like this, obviously it's a very volatile time. So what I do want to be doing, I want to be securing that bag, securing that successful trade, more or less as quickly as possible without getting that instant rebound, right? So if we do see a big crash to the downside, I'm going to be taking profit, 25% equity, and then I'm going to be moving that stop loss down to my entry. And then you're safe. You're not lost. It's always going to be a winning trade, right? It's called gridding your take profits. But yeah, this is going to be the move to the downside, around 5.86% there. It'll be quite interesting to see how this does actually plan out, right? Because we did see this low actually get set here yesterday, coming through around 28k, as I just said there. And from there, you can see the low on the RSI is around 32.50. Now, if we do dump to the downside here, guys, if we dump to the downside here, and we have a bit of selling power coming through, if we don't break this low at around 28k, then it's very likely that we're going to see another bullish divergence, right? And that is an indication for a bounce in the price to the upside, right? And this is why we stagger those take profits, to prepare for that potential reversal, that potential trap that we could be falling victim to, right? So yeah, let's move on with that. Obviously, volume is getting dangerously low, right? It's getting dangerously low. It's coming down like quite rapidly at this point across all the charts, because you can see we've just been ranging in this area, ranging between that 30,600 and that 28,700. So that's gonna be the short-term time frame cover, guys. That's the sort of trade that I'm looking for. If we, out of nowhere, see a beautiful pump to the upside, then there is a measure move up. It's going to be around 6.62%. And then these are the levels that I'm going to be looking out for. They're not going to waste your time reading them. You can see them on the screen. Moving through to the midterm time frame here for Bitcoin. And I want to explain a little cheeky position that I made coming through yesterday, right? It wasn't too bad here. It was basically, we were waiting for that candle body close outside of this bearish pennant chart pattern here. The measure move, as you can see, is like so, right? The measure move is like so from there, and we did have those take profits staggered in pretty nicely, right? Pretty nicely. One at 28,669, love to see it, and 28,000 and $28 there. You can see went short from this area here, got that candle body close. I was like, yep, now's it time, bang, straight down to take profit 1, and then I put my stop loss back at entry, right? Stop loss back at entry, and then came straight back down. take profit too. Yes, from there, we reversed pretty quite rapidly, as we were just saying on the shorter term time from here, from that bullish divergence. But hey, we already banked 2 take profits along the way. So that's a 50% of our equity in profit there. And as you can see, 3.25% gain there. So we're going to half that, and that's going to be our initial profit for the trade. Now, as you can see, we are on the breakdown of this bearish pennant chart pattern yet again. I was looking at this for another short position, right? It's still valid. It's still going to be good. We're going to get a different measure move now because it's going to be a different time frame, but sorry, a different, more cold area in the symmetrical triangle there. So let's bring that down, guys, and let's have a look at that. Because as you can see, this is going to be the measure move down, but ideally, you would have got in for a trade here at 29,000. I was going to enter my short position there, but then I looked at the potential for a bullish divergence coming through on the RSI. And if we do break this low coming through at around 40.8 there on the RSI, we're most likely not going to break it on the price action at 28K, right? So it's going to be very, very likely for a bounce coming through at any time here if this bullish divergence is going to form. So for me personally, it's the risk reward scenario is not really there. So yeah, I didn't quite enter that trade there. But yes, better to be safe. Better to be safe than sorry, right? But yeah, that's going to be the midterm covered up there, guys. Let's jump to the DMI, the Directional Movement Index, because it's going to get quite exciting coming through over the next few days, right? The next few days, the reasoning for this is you can see where the ADX has been for quite a while, guys. Really, really quite low. We know our key levels are 20 and 25 there. If the ADX is climbing above that and we do get a crossover from the positive and the negative directional movement index there, if we do get that positive or negative crossover with the ADXI, it basically signals that we're going to have quite a strong trend, right? At this point in time, we're currently on a bearish crossover, right? We're on a bearish crossover. Now, with the ADX climbing ever so higher, clearing that 25 level, guys, it's very important because if this keeps going up and we do get a bullish crossover, we're likely to see some serious quite good price action to the upside, right? And if that is going to happen, then we can get quite excited about some gains coming through there if we are going to see a nice breakout to the upside here on the shorter term time frame, right? Now, that does bring me on to the longer term time frame because, one, we're in a falling wedge chart pattern on the daily, guys. Falling wedges, they tend to usually break to the upside, right? We've got a lovely 41.82% gain to the upside there if the breakout is going to be significant. And also the 0.5 Fibonacci retracement. That is the reversal of the potential trend, the reversal of the current trend, which is obviously down. So yeah, that's definitely going to be an area to be looking out for there. And that is quite far-fetched. It is 42,800. But if we do see that that bullish momentum coming through, that really nice uptrend coming through on the DMI, it is likely that we are going to see some quite nice favorable price action to Bitcoin, right? I would ideally be looking for the 0.236 Fibonacci retracement for that shorter term position that we were just talking about there. Those figures are a lot more achievable here for those swing trades there. But if we are going for those really, really long-term swing trades, those really, they're going to last literally like maybe a couple of months or so, then this is sort of what I'm looking for. Ideally breaking the 0.382 Fibonacci retracement, and then the massive checkpoint is the 0.5, as we were just saying. In terms of measure moves there, 41.82% is on the cards there. This is what we're looking for if we do see a bit of bullish momentum. Now, with that being said, it does look fairly bullish on a lot of things, including even the weekly, guys. Look how many red candles we've had in a row now. We need a bounce, right? We do need a bounce coming through. But as I was just saying, with that being said, let's not be naive here. The whales are there. The big dogs are there. They're trying to manipulate the market like crazy. So it would be no surprise to me if we do see another leg down to the swing low of the Fibonacci here. And that is going to be at a price of around 26,569. And then if we do break that to the lower side, then we can see a measure move also to the downside here of around, it brings us down to 14K. Quite depressing stuff. But hey, if we're shorting that market all the way down, 41.69%. Again, love to see it. 41.69%. A measure move to the downside as well. So yeah, we're going to make money either way here. So sit back, relax, calm, collected, whatever the market's going to do, we are going to trade it and we're going to make money. And that's why it's key to be learning technical analysis and to be able to dissect these charts, right? And just out of instant, if if crypto became like fairly untradeable, I don't know, for whatever reason, we can always jump to stocks, we can always jump to commodities, we can always jump to forex if we really need to, because we know TA, guys. We know TA, and this is why it's so crucial to learn this. If you are really unhappy in your 9 to 5 job, waffling on here, but this is the key. This is the way out, right? This is the way out. And yeah, I do have loads of free trials to all my indicators and stuff at the moment. If you do want to go check that out, the link is in the description for my website. Anyway, let's jump through to the weekly time frame, because I'm going to go through some really, really key levels to be looking out for here, guys, because this is where it gets fairly interesting. Oh, wait, no. Let's go back for a second, because you can see we do have a massive bullish divergence here on the RSI, right? Massive, massive bullish divergence. And at this point, we need a bit of upwards momentum. So let's have a look. So there's signs, this is what I'm trying to say. There's signs that we are going to see a bit of upwards momentum coming through from here, because we're not just going to have 8 weeks of pure descent without any sort of lower high being set, right? So we need a lower high, we need a bit of bullish momentum to get there, and the most feasible area to go to is the 0.236 Fibonacci retracement, and that's going to be bringing us back up to 33,200, guys. So that's sort of the area that I'm looking for there. If we do come up to that area, probably to bounce down again from there if we don't start a lovely uptrend like we were just saying on the ADX. But yeah, let's look at some levels. Let's look at the weekly chart from previous bear markets and stuff like this, right? When do you see so many bearish candles in a row without a retracement? As you can see here, we got 3 there, 1 bullish candle, and then 3 bearish candles. And from there, we found a bottom around 5,700. But from there, you can see how big the percent gain to the upside was from there, right? It's absolutely huge. It's a 48%, 49% gain. Say 50 for simplicity's sake, right? It's a 50% gain to the upside. That's nuts. That's absolutely nuts in terms of gains here. So we need to be basically ready for that. Don't be fooled that it's going to absolutely crash into the abyss. We need lower highs. It needs to be a healthy chart. Now, let's look at the macro for a second here, guys, and let's get rid of that, because as you can see, we are still setting higher lows, guys. We're still setting higher lows. Yes, we're on a little bit of invalidation here, but the levels that I'm looking for there, if we are going to come down and bounce, you can see we're going to have a horizontal coming through from here, and that's going to be around 19,885 to the candle blue close of around 18,800. Those are key areas to be looking out for a bounce there. So if we do see a massive, massive descent to the downside here, we're likely to come like this and then bounce really quite aggressively, really, really quite rapidly for that potential lower high, that bit of bullish momentum. Because as I was just saying there, it's very, very unlikely that we just keep cascading down in this filthy, bearish, dirty, deep sea dive staircase of bearishness coming through from there. Key areas that I do want to be looking for candle body close for the weekly here is going to be above these filthy wicks here, guys. You can see these wicks that we were playing around in May. You can see the levels that we were trying to basically bounce from, and this is definitely something to not be overlooked, around 29,293, and that's probably why we are actually ranging in this area right now, because it's actually a very, very strong level of support, right? We literally spent near enough 10 weeks along this area here before having another run up. So let's be cautious, calm, collected. If we do take another leg down due to the whales manipulating the market, then we will bounce up fairly soon, right? And if that is going to happen, we need to be looking at, let's bring up the volume weighted ATR bands coming through from here, because these are very, very crucial indeed. Very crucial on the daily, I would say, because let me just show you guys for a bit of example. You can see how much we bounce on these for the daily, right? You can see, let's even go back in time a bit more. You can see, obviously, this is the March crash, obviously, the pandemic times. But yeah, we did reclaim it really, really easily. But you can see from there, we just bounce along it pretty famously, right? It's really, really quite good for a level of support. So where are we now in terms of the volume weighted ATR band? We bounced on it once, okay? If we come down, the bounce that I'm looking for is going to be around 25,000, 26,000. And if that is going to be happening there, we can see that we've got a very, very nice downward sloping support line there as well. So yeah, there's a lot of factors that is looking like we're going to see a bit of upwards momentum fairly goddamn soon. fairly soon there. So yeah, keep your eyes peeled for that. But yeah, that's going to be the BTC update today, guys. Coming into the weekend, I hope you're all going to have a fantastic weekend. I probably will do an update tomorrow as well. And I am creating my new streaming schedule this weekend as well. I know the community is very excited about that, as am I. I'm very looking forward to that as well because I have missed streaming quite a lot, guys, right? So yeah, let's end the video there. But yeah, thank you ever so much for watching. Smash a like on the video. And guys, if you've got a bit of comment about the TA or anything like that, or what you think's going to happen, smash a comment down in the comment section, right? And I'll get to them. I'll reply to every single one of your comments, guys. But yeah, thank you ever so much for your support. Do appreciate it. If you like the content, smash a sub. You know what to do. But for now, it's going to be peace out and goodbye from me, Crypto Chester.